All right, why don't we kick the event off? This is Camille Gran here at Mayfield. We are an early stage venture capital firm and spending a lot of time recently figuring out how to improve business operations in the current economic climate. One of the key metrics that we think is a driver for real understanding of how to run your business is NRR. And the whole topic today, we're going to try to unpack with a couple key experts. And dive into that here in a minute. So just a reminder, we are recording the call today with the goal of being able to share it with you and your peers post the event. We'll also be collecting some takeaways, both some questions and polling that we'll do throughout the call, as well just some Q&A conversations as a way to extract some best practices that you and your peers can learn from. So we plan to share that post-event sort of takeaways piece with all of you as well. Just by way of background, Mayfield is an early stage venture capital firm. We're one of the oldest venture firms here in the Valley. We're on our 20th fund. We have invested in nearly 800 companies over the course of about 54 years. Being on a 20th fund, we've been able to develop a lot of interesting insights about how companies begin their early product market fit, that early inception stage of developing customer profiling, ICP, wedge use case, and really realizing something I call violent product market fit, getting to that true must-have sort of solution in a marketplace. And one of the things that we're seeing today, as I mentioned, is NRR is becoming one of these great definitive metrics to help understand the quality health of a business. And what we're going to do is unpack what it means, why it's important. I've got a couple experts here to join us today. Aseem Chandra, who has spent a number of years at Adobe and Omniture running that business from an operations standpoint, and now having launched a new company. So he'll tell us here in a minute a little bit about himself, his background, and why NRR is important. And then Levi Kugel from Quantometric. He's running customer support strategy for Quantum. I'll let him introduce himself after Aseem introduces himself here in a minute. And the two of them are our experts today. But I think everybody else who's joining as well are experts. So I want to encourage chat session, or use the chat bar here to ask a question. We'll elevate or turn your muting off so that you can actually talk. We'd love this to be an open discussion. So use the chat bar, write a question. We'll stop at any time, make this as interactive as possible, and really do want to encourage this to be a learning opportunity for all of you and to get your questions answered. So with that, Aseem, could I just have you introduce yourself and maybe tell us a little bit about your background, how you came to this conversation of why NRR is sort of the key metric of the day, and what it's all about from your perspective?
Yeah, Camille, thank you for that tee up. And for those joining in, my name is Aseem Chandra, and I'm the co-founder and CEO at Immersa. My background prior to this is, been in the tech industry pretty much throughout at Oracle in my early years, and then went to a very data-centric startup called Omniture that really was at the early days of big data. And then eventually we were acquired into Adobe, and I spent a number of years at Adobe building out that business into a $3+ billion ARR business. And what we realized as we started to scale up is, the amount of new logos and the new revenue that we would bring into the business had very little impact on the growth curve of that business relative to retaining existing clients and trying to grow the existing install base of happy customers. So that was sort of my early introduction into the relevance of NRR, because as we used to say over there, there's no way to fill a leaky bucket. And so now we are heavily focused at Immersa on helping other companies figure out how to plug that leaky bucket.
Great. Why is this, do you think, such an important topic today, Aseem? You've been in the industry for years. Perhaps it's a new topic, or maybe we're looking at it from a different lens. I mean, what's your view from a history standpoint, I guess?
Yeah, I think, look, the SaaS industry has now been around for a while, and people understand the importance of retaining clients that they've already acquired. I think what's changed in the last couple of years, that if you look at sort of the trajectory that most of us as SaaS companies have been on, 2020 proved to be a shock year to the system where things started to really take off as everybody moved online. A lot of the services that were necessary to move consumers and businesses online thrived, and a lot of companies started to focus on acquiring new customers. 2021 saw more of the same. Really in 2022, with the macro environment turning south and a lot of focus on a lot of investment that had gone into these SaaS companies. Now people are starting to question that and saying, is this the right investment? And so last 6 months, we've started to see some layoffs. We've started to see a lot of focus on cost and efficient growth. And that's changed the environment. And to us, that signal started showing up in the data that Immersa collects as early as June of last year, when the signal turned from how do I acquire new customers to how do I make sure my existing customers are happy and I can retain them. And that's what clued us into this process, just kind of looking at the data that we're collecting on behalf of a number of SaaS companies that we work with, that there's definitely a shift occurring in the market. And so from that point forward, Immersa sort of focused on how to help SaaS companies take that on and help them drive NRR. And some of the public market signals that really I think a lot of us are familiar with, but came as somewhat of a shocker when it was first announced, is when Salesforce, which is the SaaS company that started it all, signaled that they were unable to commit to a forecast for 2023. And that's when I think a lot of people started to pay attention to understand why. And part of the reason why is because with the number of changes that are occurring in the industry in a very short period of time, it's difficult to predict what their current retention rate is going to be. And Gamil, I'll pause there for a moment and see if there's more questions around this, but I'm happy to kind of take through an example of how our industry is so dependent on NRR being healthy to drive growth.
Yeah, let's unpack that. Let me first ask sort of a primary question, and Mike, who's running operations here for us, can you submit the first polling question? And while he does that, Aseem, maybe you can explain. I know you spent a lot of time with the market, talking to many different players about NRR in general. How important is it? Does it come up as the most primary topic, or are we still sort of learning here? So if you could all answer the polling question while Aseem maybe gives some background on sort of the diligence he's done in the marketplace.
Yeah, I mean, look, I think what we started to notice as early as early last summer is that a lot of the conversations started to turn towards retention and NRR, and in our interactions with SaaS companies. And it's, the math is really simple. If you're a 100 million ARR business today, and you're promising 40% growth, about 30% of that, or 30% of that 40% number is going to come out of either growing existing customers or preventing churn in your install base. And the remaining 10 or 15% might come from acquiring new logos. So the math works while you're at a certain scale, but then as the numbers start to grow, the dependency on NRR and retention and growth sort of starts to increase relative to new logo acquisition. So in the early days of a startup, it's all about how do I go get new clients? But as you scale up, it all starts to shift towards how do I retain the clients I already have and then grow those clients. And if you look at the way the tech industry and investors reward companies, it's based on the rule of 40. So the rule of 40 implies that you're able to show net 40% growth each year, less your margins. And if you're unable to prove that, then there's a huge penalty associated with it.
Yep.
And that has really started to deflate SaaS values over this past year, as is pretty evident from the public markets, but even the private markets itself, and led a lot of founders and CEOs to start questioning what's the next play in their playbook to bring the original numbers back. And so we've seen a lot of interest from companies that we work with to start to focus on how do I drive retention and growth in my install base, as opposed to how do I drive new revenue.
Great. Can we put up the answer to the poll, see what's kind of response we got? And maybe you can react to this, Aseem. What do you think about the data?
It's pretty consistent with both anecdotal as well as the data that we've collected in our own experience. We're also seeing a lot of So there's a number of industries that are starting to track, or a number of agencies are starting to track our industry to figure out how this is evolving. Gamil, if you don't mind showing the next slide on the deck.
Sure.
There's really good insight there from third parties that kind of show how user account retention benchmarks are changing. And as we see more and more companies move towards product-led growth and towards self-service signups and whatnot, there's some data to show that about half of your users are going to leave within the first week or two of signing up. This is kind of more on the consumer side. And on the B2B side, 2/3 of the companies that currently operate in the SaaS world have greater than 5% churn. So if you think about it, the way I look at it is, if you're a 100 million ARR business, the 5 million that you lose or 5 to 10 million that you might lose the next year because you didn't take care of the customer or didn't engage with the customer in the right way, or the customer didn't see the value out of your solution, whatever the reason might have been. But that loss hurts a lot more than losing a new deal. And the reason is that you already invested all of your cost of sales. You've already implemented the solution. You've already helped the client be successful. And now, for whatever reason, they've chosen to walk away. And that dynamic, unfortunately, has become far more common in the last few months, because guess what? When people lose employees or lay off employees, not only are you losing seats, you're also losing usage. Yeah. And at some point, somebody's going to look at that and say, are we really getting value out of the solution that we've deployed? And literally every renewal conversation we see turn into a discussion about either a downsell or an attrition in the SaaS industry at the moment, which is a lot of our customers dealing with that issue, because everybody's trying to figure out how to grow efficiently and how to grow profitably, as opposed to simply grow at all cost. So that's kind of the context for why this is so important, and hope this data sort of helps shine a light on it. And then, of course, if you can retain your clients, 5% improvement in retention increases profits by a quarter to a full 95% number. So I think there's a lot of value in focusing in this area today.
So there's a question from Ash, and Mike, if you could turn on Ash's mic, maybe you can ask the question directly. But my reaction to your question, which is how important is NRR in a new category, and can you combine new logos with NRR? And I think Aseem sort of alluded to this before, which is that first stage of a company, when you're realizing product market fit, you're collecting logos at almost any cost, but you clearly can't do that for forever. And I think the scrutinization on your CAC numbers and your LTV on customers and broadly how to get to a profitable unit economics business are sort of the key numbers, which is when NRR really begins to kick in. So first innings, yes, logos are important. And perhaps that's where you begin to understand and unpack your NRR numbers at the early stage. Can you retain those early users? What can you do to improve operations around customer support, retention, upsell? And broadly usage of that initial adoption. But ultimately, once you realize product market fit, that NRR number becomes the primary number that you ought to be broadcasting. And I don't know if Aseem, you've got other points to that, or Levi, you've got other points you'd like to add to that. And Ash, I'm sorry, if you would like to add to your question there, I'd love to have.
I think you asked my question very well. It's something that we want to know. I'm the CEO of SyncWords. We are in a new category, voice-to-voice translations. It's a very new business model. And we did get a lot of new logos during COVID, and we continued to do so. But during that time, we even, we trying to kind of keep up with retaining all our old customers and growing at the same time. So I was trying to see if Aseem or someone had any insights into doing that at the same time.
Yeah, Ash, I think.
I was just going to add a point here, and perhaps Aseem, you can add to this. There's something that's very interesting to me about doing NRR analysis early. And while the quantitative data might not be there, the qualitative operational efficiency that you create in the business, so the alignment of the whole team versus just the sales team as the number and the metric capturing logos, is the real opportunity strategically. So Ash, my advice would be begin to calculate NRR as soon as possible for the operational benefit. Where is customer support engaging? Where's the rest of the operations product team engaging on the products that are upselling, the ones that are really getting traction? And how does this whole war room, if you will, that looks at every customer from a customer success standpoint begin to operationalize that? And the sooner you've got that team operating with that sort of elegance where everybody knows their role, the sooner you're going to get to a well-run machine. So,
yeah, I'm just going to add a comment to what Ash and Camille just said, and then perhaps Levi, you can share your real life example and tell us a little bit more about the shift you've seen in the past few months. But I think, Ash, we're at a stage as a startup right now where I can tell you all of my customers and who are their key contacts that work with us. Between my co-founder and I, we could tell you everybody that we work with today. Because we're about 18 months old as a company, and we know all of our early adopter customers. Pretty soon starts to get to a point where you can't keep track of all that. And I think it's less about whether you're in a new category or not, and more about at what stage of maturity you are. And the sooner you start to operationalize your processes and have them be more data-driven, the more likely that you're going to retain some of those clients over the long run and catch those signals while they're still early. So I think that's kind of the way we look at this, and that's our philosophy as far as how we're building our business. Is we're entering and defining a new category as well. But as soon as we find that we can't keep track of all of the interactions we're having, it moves to a data-driven process for us.
So let me formally introduce Levi, and then maybe you can answer the question. And I'd love to get into unpacking kind of who owns this from a process standpoint. And we've actually got a polling question on that. So first, Levi, if you could just introduce yourself, where you work, the role you have, and what you're about, I guess.
Absolutely. Excuse me, I'm extremely passionate about this, and this is a topic that's very close to my heart. So it's really exciting to be here with all of you today. My name is Levi. I work at Quantimetric. I run a team of strategy under customer success under our chief customer officer. And my real purpose in the organization is to focus on our customer journey and to make sure that we're thinking about retaining our customers for 3, 6, 9, 15 years, as opposed to a short term. And I think as it relates to this topic, I think I realized really quickly that it's a really hard deal to bring somebody to your home, but it's really silly to leave them in your home and make them feel so uncomfortable that they have to leave. And I kind of look at it in that sense as it comes to your customer retention as opposed to acquisition. Acquisition is hard, very challenging. We go through such sales cycles. I think we're all category inventors here or creators. So it's fantastic. We're also in our own category that we positioned ourselves. And we find that as you're engaging in this, launch, especially the startup, to really acquire new logos, you're making such a tactical mistake by not putting in 1/10 of that effort to really ensure that your customers are on the path to success. And I think there's almost no industry that is agnostic of this concept. Restaurants have this type of understanding of your retention rate over time, right? Everybody kind of looks at this type of data. But I think it becomes more challenging when we're in a SaaS business and we're selling products that are potentially more expensive or are premium products. And in order to really convince a customer to be able to expend their resources, because they also have financial constraints, they also have acquisition and retention, and where they put their dollars is crucial. Being able to articulate to them the value of staying with us over time and developing their customer signals to a point where they're continuously growing with us is actually an incredible way to grow your business. And I keep on thinking about it. Aseem mentioned the leaking bucket, and the notion of if I have to walk to a well every day and bring a bucket of water, every single drop of water that I lose is water that I have to collect again. And so we're doing ourselves such a disservice by putting all this effort into convincing everybody to come join us and not really honing in on what makes them successful to be able to drive them forward. I'll tell a little bit about what we do at Quantimetric. Quantimetric, whoever's not familiar, I'm sure all of you have gone to a website recently and tried to accomplish something that wasn't working the way you expected. I mean, 15 minutes ago, I tried to log into a flight and it just would not accept my record locator at all. And this happens every day, all the time. And you've probably encountered this a lot. I wonder, have you scrolled up and down furiously, rage clicked, potentially even went to a different site or called their support channel, their most expensive channel in a business? And you probably wondered to yourself, wouldn't it be nice if this business knew that I struggled so much? And the truth is they really don't. And this is how we help our customers. We give them insight into these types of operational impediments that they're putting their customers through, really focused on a customer lens. And for us, in order for us to really operationalize this across a customer, we do best when we're really across the organization. And so in order for us to retain our customers at the same spend, or potentially more, as we're talking today, we really need to hone in very, very clearly on the signals that depict health, the signals that depict risk, and be able to operationalize it so that we're way ahead of the curve. And I don't know if any of you feel this way, but in our business, if I'm finding out 3 months before a customer has to renegotiate their contract,
Yep.
way too late. It's
Yeah.
just too late. And so our entire focus is really making sure that customer journey, we have full insight into the breadth and depth that our customers use us and how that translates to their health, their value, and all the other things that are accoutrements of these metrics.
So Levi, thanks again for being here. What I'd love to do is have you unpack a little bit about the genesis or the making of the NRR organization, if you will, from a who owns it. And Mike, if you could put up our polling question, which is about the ownership here. And you, of course, have the title of Director of CS. Who else is accountable? And how did that all come together? Was it a realization post a disaster, or did you get in front of it? And just sort of break down sort of the people process on this whole thing.
Absolutely. I feel like an extremely old soul because, NRR has been a focus of mine since day one. Mm-hmm. I mean, our company has been focusing on risk signals for, I'd say, almost a year and a half. Mm-hmm. It's been a really long process to try to identify what we consider crucial. But as it relates to the metric itself, this is actually owned by our Chief Customer Officer and myself. Okay. And so we own both of those metrics, and probably the genesis of this, and I'm 100% sure there's no right answer here because there's so much varying degrees in how companies approach this, whether it's the CRO who owns it or many other constituents. But for us, it's about how we perceive our strategy and customer success. And we're really focused on growing our customer base and growing how they're using us. And so it's a natural extension for us not only to own the renewal, but actually to own the share of wallet that our customers are contributing to. So even though our team is perhaps not as naturally revenue focused as a sales team, as it relates to upsells, that ownership has really provided clarity in the top line view of our customer health. Some people might argue, hey, revenue is revenue, retention is retention. But if you really look at a business, it's that whole pie at the end, which we're responsible for. And so we've decided to take it on ourselves and promote both of those. We work very closely with the sales organization, but we own NRR, we report on NRR, and it's definitely a stressful moment for us.
Yeah. I think I just add one additional comment to this. So what's interesting from our lens, as Immersa, we've talked to probably about 200 companies over the past 18 months and tried to understand who owns what in a go-to-market organization. And our key learning was that, given the focus on new ARR and sales, there's a lot more structure and a lot more focus on data. And if you go to a Salesforce conference, you're just as likely to run into a data analyst or a data architect as you are somebody who is a CRO or a head of sales. If you go to a Gainsight event, you're not going to meet any data analysts yet or any data engineers yet. And if you actually spend time in a CS organization, and we learned a lot from working with Levi and his team here, there's not as much structure in the process definitions and what actions to take when a client is signaling a red flag or a yellow flag. And even the data sources that you need to tap into are not quite as cleanly defined as they are when you're on the sales side. So when you sort of look at this and say, okay, what's wrong with this picture? Well, if you're trying to grow your business 40% and 30% of that growth contribution is coming from NRR growth, and the other 10% is coming from ARR growth, the resources that are applied in the industry are completely flipped.
Yeah.
And so that's one of the realizations we had over the past, year or 18 months of kind of digging into this, is that there's actually a huge amount of potential here to bring some of the same discipline around stage management, customer journey management, data analytics, operationalizing that data, as has been done in the sales side, do it on the retention side as well. And that each incremental point of growth and opportunity that you create there is much more valuable from an investor lens than each incremental point of ARR growth that you create.
I wonder if you all could react to the poll that suggests that some 47% have the CRO running or owning the number, and even others, 12%, have finance running the number, which is interesting. RevOps, I think, is an emerging skill in some organizations, and then of course growth marketing. I would think would be, aligned with the marketing team in that regard, but 6% there. So do you react to that in a way that says these are just early innings for various companies and they ultimately get to where CS owns it, or where does this ultimately go, do you think?
Yeah, actually, just to call out on the numbers for those who are tracking it closely, the percentages represent, 13 of 17 is 76%, or 8 of 17 is 47, not the distribution of the curve that we're seeing here. But I think it's not unusual to see that most of the ownership here sits in customer success, and then secondarily with the CRO. Sometimes we see that the head of customer success reports into the CRO, and it's a shared responsibility around upsell or cross-sell with the head of sales, because obviously the relationship is, so you kind of want to separate out who owns the relationship with the customer versus who owns the voice of customer into the organization. Mm-hmm. And we see that quite a bit. We see companies kind of oscillate back and forth in their over their journey as they try to figure that out. But the two models that tend to come out is, one is where the customer success organization not only represents the voice of customer into the organization, but also is responsible for closing revenue, usually in shared responsibility with the head of sales. And then the other model is, no, we want to maintain a purist view, and they represent the voice of customer into the organization, and the quotas are carried by the sales team, not by the CS team. So those are kind of the two ends of the spectrum that I've observed in our interactions. But I'm sure, we see everything in between, and I'll let Levi maybe comment more as well, since he's actually a practitioner of a lot of this and far more experienced than I am on it.
Yeah, I mean, maybe the only thing that I could add here is that I think it's very much dependent on the composition of your team. The team that you have and the skill sets that they have, whether in customer success or sales, will very much determine if they're capable of owning that. For our scenario, we have account managers who are revenue and really driven by expansion in addition to retention. And so we have the capability to, I use this word, it's not my favorite word, but be more offensive than defensive, if that makes sense. Mm-hmm. We're on the offense because we really believe that we provide enormous value, and it's not about retaining our customers, it's about growing them. And so we've built the structure of customer success, me and Mark, our Chief Customer Officer, around that concept of building a team that is able to answer and own these types of notions together with sales, because we work very, very closely with the sales team.
So Ash has got another question here about NRR in a usage-driven model. And I think there's a number of metrics, sort of an alphabet soup going on these days. We got GRR and MRR and ARR, of course, and now NRR. And tell us, Aseem, as you've been building a thesis around this topic, how do you think about these different metrics, usage-driven SaaS, unpacking these numbers, and then to the point of who owns them, making them decipherable, I guess, by the individuals in the organization so they know what to do? And you mentioned, sorry, long question, you mentioned some red flags, and I'd love for you to sort of unpack sort of pre-indications of red flags with some of these metrics.
Yeah. So I think I'd preface that by calling out that, for those of us who've been in the SaaS industry for a while, represented by our lack of good hair growth, because it's a stressful place to be. You can look back and say it used to be pretty simple. It was any kind of new initiatives were spearheaded by marketing to launch a product, and then it falls into sales, and then from there to customer success and whatnot. And the reality is today very, very different. You've got a variety of different go-to-market strategies that span everything from marketing-led to sales-led to partner-led to now product-led, and a mix typically of multiple strategies in the same organization, depending on what they're trying to optimize for. So the world has become far more complex in terms of the processes that are necessary to support that. And unfortunately, what ends up happening in most times is when we interact with customers, we expose our org boundaries to them. So to Levi's point earlier about trying to, book a flight or to sign up into a website to check in, if different parts of those processes are owned by different parts of the organization, those cracks become visible externally very quickly. And so our view is that these processes need to be more data-driven, more automated. And so what's interesting is over the last few years, product data and usage data has become a very valuable signal into these metrics, and more from an operational standpoint. I think from a financial lens, the definitions are pretty consistent over time, but from an operational lens, when you look at these metrics, NRR, ARR, et cetera, and how do you optimize for it, product usage data starts to play an inordinately large role in reflecting what users are really trying to do. Levi, anything you'd add to that? I mean, I know you have already built internal systems that give you visibility into what customers are already doing for you.
Yeah, I think somebody famous once said that, fame is the perfume of heroic deeds, right? And by that, they mean that it's not really, you're not trying to reach fame. I think NRR is the same way. It's merely an after fact. And if you're looking at that, you're really missing the composition of what gets you there. And that's really how we look at it. It's the end result in which we're extremely proud of, but it's not the method in which we're going to fix this. It's only the most lagging indicator that will give us what our business looks like. And so when we think about these signals, and I think it's really important to note that the practice of understanding risk is one that requires thought. And Aseem and his team have been absolutely invaluable in using their expertise to give insight into what types of signals can be used and the different areas. Usage is absolutely critical for us. It's in the same way that it's usage is not correlated directly to value, but it's a great indication. And especially if you're a product that is a premium product, even if you're driving an immense amount of ROI, I've been in these conversations before, and I've found that the articulation of ROI will never be as strong as an entire business using your software on a day-to-day. And it's an irrefutable fact that when you have an entire business using your software to drive action, it is really the basis that nobody can argue with. And we've had customers that have considered us expensive and suggested that they will churn from us, and their team revolted because it was so crucial for them. So we look at usage in a multifaceted way, which we can talk about in a bit, but the way our customers engage with our platform, the frequency in which they engage, the type of breadth and depth in which they engage are absolute proxies to understanding what they're driving out of it.
Yeah.
Great.
Yeah, I think give me one other comment I'd add is that the sort of the historical perspective of who's logging in, how often are they logging in, and what are they doing in my product. Most engineering and product teams have had access to that data for a long time. In fact, there's a whole new data asset that has grown inside of B2B SaaS and B2C SaaS companies that is created by companies like Pendo and Mixpanel and Amplitude and others over the last 10 or 12 years. There's a net new data asset that's been created inside your engineering organization. Unfortunately, that data remains locked in engineering and never finds its way out. It's clickstream data. It's very different from transactional data that sales and customer success teams are used to operating on. It's very difficult to merge that with transactional data because oftentimes you don't have common IDs or shared IDs between those data sets. So there's a lot of data challenges around that, but it is an incredibly valuable resource for companies in understanding what is their customer really doing. But we've sort of focused on how to operationalize that. There's actually a couple of slides here that I can show that.
Yeah, I wonder before you go to the slide, maybe Ash, let's bring you back in. You've got a couple of questions here around how Immersa actually does this, and even another question. So maybe just have you ask your question live, and let's make sure we get it answered.
Okay. Yeah. Hi. So your points are great. Both the speakers, Aseem and Levi. Just in terms of like the red flags which you can flag, right, through your software, through your SaaS models, respective SaaS models. How does that work? Like we use HubSpot, for example. Do you all integrate with HubSpot and kind of flag it over there, or do we kind of see those red flags in your software? Like, what's the interaction? And we use Mixpanel too. So how does it all kind of work?
Yeah. Great question.
I'm sorry, it's not a high level question. It's kind of more of a
yeah, but we got to know how things work.
Question.
It's a great question. So,
but yeah, exactly. I mean that would be very helpful.
Yeah, Ash, are you using the Mixpanel data outside of your engineering team today?
We want to, and so yeah, it's like we're in the process of looking for funding. We're growing at the same time, but we want to be prepared because VCs do ask us about these things apart from our cool technology.
Yeah.
So we want to be prepared for the future when we start rapidly scaling. How we keep our customers, how we collect this data from Mixpanel, how we do the cross-selling. All these questions come up, and is there a way that y'all can help? Because so I'll let you all speak. Yeah.
Yeah, for sure. I mean, look, I'll tell you how it works first, and then we can talk about how we can help. But the way that we've approached the problem is we've effectively built out a data platform for business users that can collect data from both the product usage side as well as from the go-to-market side, the CRM data sets. And then behind the scenes, we've created predefined data models that are highly opinionated about what we believe to be best practices in the industry based on our experience working with a number of clients that can do things like, well, first of all, just combine those data sets to where you may not have a shared key or shared ID between Mixpanel and HubSpot data, but we can actually look at the data and examine the data and come up with probabilistic outcomes. Or if we're not sure that certain, like 90% of your data matches, but 10% doesn't, we'll surface that to you and ask for advice. So it's a little bit like Google Photos, where is this picture the same person as this other picture? And then it learns from that. But once the data sets have been matched, then the next step is to kind of create certain metrics on it. So on the go-to-market side, the metrics are very different than off of the same data than they are on the engineering side. On the GTM side, you're kind of more interested in the different stages of the customer's journey. So intent, activation, engagement, adoption, consumption, those are kind of the stages that you typically go through. So there are different metrics that indicate progression along that journey, which we predefine in the Immersa. We can modify those definitions. We can work with you to make sure if there's specific metrics you care about, we bring that in. Then the next step is to establish certain thresholds and say, at what point do you want to trigger an action? And the actions get triggered in your example with HubSpot, but we can provoke the action in any destination SaaS application. So whether that's Salesforce, Intercom, HubSpot, Gainsight, that's less relevant to us. We're not trying to be the glass that the CS team or the sales team logs into every day. It actually turns out there's too many of those already. And so that's why you end up in this point-to-point integration mess that is very, very difficult to navigate and maintain over time. It works initially, but it breaks down super fast. And so that's the idea, is to sort of insert Immersa into the middle of that, to where we can bring the data into one place, give you some predefined metrics that get you operationalized very, very quickly. Typically in about 30 to 45 days, we'll start to create certain signals that help you understand what's going on in those accounts. And then we can push those signals directly into HubSpot. In HubSpot, we find either people want to create, like some of the accounts we're working with, depending on the use case, we end up creating a new deal or adding information to an existing account from the product side to bring that into the deal so that the sales rep can see what the customer is actually doing without having to log into these product analytic tools like Mixpanel that weren't really designed for sales teams. So that's the workflow that, or the data workflow that Immersa enables, is to bring the data in, apply some intelligence, and trigger actions in the destination apps where your users currently sit.
So what would be the action in the form of, like, what would be the message of the action? Like, hey, call this person now or something. Like, how does it work? Contact these people. Give me some examples of that. Like,
yeah. So let me.
What are typical action item examples? Yeah.
Yeah. So we are currently working with Levi. Why don't Levi? Maybe you can talk a little bit about some of the things that we're doing with churn and renewals. You can talk about how you're approaching those actions today.
Absolutely. But before I get into it, I just want to mention that we learn from our customers. I mean, I visited several customers. I want to give a few examples. We have a customer, a huge retailer, a luxury retailer, and their whole world revolves around what they call plan. Every single day, they have a plan on what they're supposed to do. And the moment that goes south, they have a series of signals that informs them of this. And the objective of the entire organization is to make a plan. And they'll do anything. If at 10 a.m. they're not in the sales where they want to be, the organization will stop and use those metrics to drive it that day. And it's about time. And another really good example that I was absolutely inspired from, a retailer that you all know, a massive retailer that does buy online, pick up in store. They're really, really focused on how long it takes for you to pick that item up. And so what they do is they measure, using our software, the amount of time you're sitting in your car from the moment you clicked I've arrived until the moment you leave. And if that timing exceeds 90 seconds, their entire regional management team is informed immediately. And the reason for this, they don't want to wait until Wednesday to find that out. They want to know Monday so that on Tuesday, they can reduce that trend. And maybe they're not going to reverse it, but they're going to make a little difference. And so we take that approach in trying to create as many signals as we can in our customer base to really get that information as early as possible. And so, there are probably three categories in which we think of risk. And then I'll get into a few examples, but they're the things that you control directly, absolutely directly. And that could be the amount of consumption, that could be, support ticket volume, or all these kind of metrics that you can use to say, hey, this is my team and this is what we're doing for the customer. They're the things that you're indirectly in control of, such as user adoption, value realization, and everything that emanates from the work that you're doing. And there are the things that you don't control at all, such as a recession, such as a company going out of business, such as the health of an industry, the macroeconomic trends. And so the marriage of these signals together really helps us get this full view. So we are a consumption-based pricing model, which means that at times where people are seeing less visitors, we make less money. And so that is actually a huge risk for us. And so we are very, very honed in on how much you're using our software in terms of the consumption of our usage. And anytime that changes, because it will directly impact our NRR down the line, we have to immediately go find new buyers or new users or new. And so that's one method in which we activate. The other method in which we activate is understanding what I'll call the funnel of value, which is probably, are the teams using your software? Are they driving success? And how is that reflected in the culture? And a lot of our customers talk about these really, incredible things like, hey, we bought Quantimetric to identify errors, but we can now release in confidence. Well, it's a really strong statement. And so how do we ensure that we're making that move to the organizational shift as part of those risk signals? And then we have some and I think it's very dependent on the business, and that's really important. High volume, high price, all of these things will change how you think about risk. But in our business, the executive involvement in our organizations that we work with is absolutely crucial. And so making sure that we're keeping constant communication with all levels of the business and signaling when we haven't is absolutely crucial. And we activate on all of these. So once we understand that a customer is under consuming, it's an all-out focus to be able to identify where we can overconsume. When we understand that our customer might not be driving all the value and all the use cases that we can really do, that is our focal point. And we sit with our champions to really drive that. And so each one of these is a way for us to enter, have a dialogue with the company or the customer early on and be able to create a plan. And what's really incredible is ever since we've established this, we found out that we have an incredible save rate. When we know about a customer being unsatisfied early enough, they're not going to churn because we're a great company. We're going to provide them great service and we're going to get there. We've missed something along the way, but knowing early enough allows us to really go in and reestablish what we're trying to do in that organization. Yeah. And so that's really what it's about for us. It's about those kind of three views. And we marry that together with our individual qualitative view. So there's always qualitative risk as it relates to things that are hard to measure. And we bring that in the form of the team's view of this or the organizational view. But having a subjective metric is really not useful unless you can pair it with a series of clear, identifiable, easy to obtain, transparent view into what you consider a healthy customer or not a healthy customer.
Mike, I wonder if you could put up the next poll. I wanted to ask kind of what are the tools that people are using today? And both you, Levi, and Aseem, you've spent a lot of time talking to customers. I love the examples you just gave, Levi. And Aseem, you've built a new technology and you talked about sort of point-to-point integration. I mean, is there a single dashboard goal here? Where does this sort of analysis and automation market need to go to really successfully support this community?
Yeah. So let me address that, and I also want to add a couple of examples as part of this for Ash to consider as on the retention post-sale side. So look, our experience has been there's a lot of different tools. Like the trend in the industry has been towards fragmentation of SaaS applications and more specialization, which leads to your data becoming fragmented and your processes becoming fragmented, and that's something that a lot of folks have tried to at certain scales try to address that by inserting data warehouses and BI tools to bring it all together. My experience with that is, I've sat in 40 QBRs over the last 10 years, and we look at
only 40. Come on,
quarterly QBR. We look at all this data, and pretty quickly, where's the problem in the business. Now you want your teams to go do something different, and there's a huge issue with that because Power BI does not translate into Salesforce or Gainsight in any meaningful way. So how do you take the metrics and the insights you have here to an account level and provide the right context for your team to operate on? And that's a very, very different problem. So that's essentially what we are building at, what we're solving for with Immersa, is to create an operational BI platform that orchestrates these processes in your current SaaS applications, uses the data from your current SaaS applications, but operates at an account level or a user level. That's the vision for what we're building. To Ash's question earlier about the types of challenges that currently, the examples that we've seen on the post-sale side. So Ash, the key point here is how do you take product usage data and compare that against what you expect the customer should be doing as they're progressing through their customer journey. So one comparison point, for example, is can I compare that to their forecasted use or planned use or contracted use in Salesforce and figure out if they're tracking to that or if they're under that number or if they're over from a pacing standpoint. And that in of itself creates a signal to where if they're over from a pacing standpoint against their consumption metrics and what they're currently actually consuming versus what they are committed or forecasted for, then there's an upsell opportunity or growth opportunity in that account. But if they're under, then there's a risk of retention and churn in that account. So that's a very simple example, but that's a often cited example of how we can create value in accounts. We've seen more complex examples where people are using feature usage and establishing certain maturity curves and saying, hey, if this is an example with, I'll just name the company. We're not currently working with them, but we really love the example that they shared with us. A company called Clary, which most of us are familiar with in the GTM space. Their CRO shared an issue with us, which is if their customers sign up and use them for forecasting for the first few months, then that's a good sign of adoption. But a year later, that's all they're using in Clary. That's a good sign that they're likely to
a red flag, right?
Yeah. So you have to figure out what are the features that customers are using at different stages of their maturity in their journey with you, and so we can help you to find those cohorts. 3 months from now, 6 months from now, a year from now, what are those cohorts and what's an indication of maturity? And then the new customer comes in. If they're not following that maturity curve, they're at risk. If they're ahead of that maturity curve, then they're clearly seeing some value coming out of that product. A lot of BI tools will let you do that, but that's usually custom built, not a productized solution. And the challenge there is the BI tools don't let you do anything with that information, because if you want to now schedule a QBR, schedule a contract discussion, run a survey, call the client, like there's, invoke an automated email reaction to that data. Those are things you currently use other tools for, and our goal is to help make those connections and automate that orchestration of that process for you.
So the poll suggests that people are pretty early, is what I would read from this, that spreadsheets seem to be the common tool. Mike, could you put up the next one, which talks about or asks what is the maturity level? And Aseem and Levi, I'd love for you to sort of dive in on this, and perhaps we can actually close. We've got a few minutes left here with how to get started. And Levi, you can share practical experience. Aseem, you've built sort of a thesis for how people can begin to unpack perhaps the problem. So first, let's do the poll. Levi, you talk about how you got started, and Aseem, I think maybe you've got a slide with sort of ideas here on how to get started as well. So
yeah, 100%. So I was very lucky when I first started at Quantometric. One of the main things that I was focused on as a number one project was understanding the maturity of our customers. We're a product that offers a lot of different use cases and an incredible breadth and depth. I was absolutely sold on this product when I saw it. And that's what really drove me into joining this company. And so it creates complexity when you have so many users of different skills. And so exactly as Aseem said, we started off with understanding what good looks like. And I think that that's probably the most important process that we went through, because if you fail at understanding what good looks like, you're just going to have a lot of metrics in front of you. And so isolating to the core key metrics that we have in our organization was the biggest step that we took. And the way that this played out was we sat down as a strategy team to understand how we can ensure our share of the wallet is always growing. And the inevitable answer was, well, we need to identify risk. And that led us to a conversation in the organization of what risk looks like, and using our data to be able to really articulate what we consider healthy and what we consider not healthy. And those were the benchmark of, even before being reactive, merely understanding what we're even looking at. And so that was our first step, and that took quite a bit of time. And I can share one of the learnings that I've had from that experience was, I love complexity. I really do, to my detriment. I love complexity. But the truth is that for everything that's complex, there's probably simpler, cleaner, easier way to look at. And it probably took us a lot longer to get to where we are today, because we tried to tackle metrics or insights that were non-transparent, hard to obtain, not as accessible on a regular basis. And what ends up happening is you spend so many cycles as an organization just to report on it that you're not even able to do anything. So let alone be proactive about it. You're basically barely reactive. Yeah. And so from that point on, what we did is, and I think this is absolutely crucial, to really get to reactive, Trisha, we have this scale as well, which we look at our customers, but to really only enter into reactive, you need to have a data set that is really supporting this argument, right? So do you have your risk metrics? Well, then you can react to it. And the way we do this is we arm our teams with this information. And I think the most interesting thing that I found out of developing this risk view is actually calling our team to task. Because you'll sit in a QBR, in an internal QBR, for example, where the team is sharing their successes with the customer, say, oh, it's a phenomenal customer. Samantha is so engaged. She's so excited. And then you look at your risk metrics and you say, wait a minute, we're supposed to have 1,000 people in the platform. Why are we talking about 2? Wait a second. They're only using us for one thing. We're only working with one team. I haven't seen anything. We're not tracking any ROI. And this really puts the team in a very tough place to really understand that they have to own these metrics innately when they come to any conversation about customer health. So it's really held the team to task, merely supplying them with that ability and giving them the forum to have meetings internally where they look at their customers in this prism. Unbelievably valuable. But time is everything. And so for us, proactivity, and we preach proactivity to our customers on every day. And so for us, it's almost second nature that in order for us to do this, we have to do it quickly. We have to find out immediately and we have to act on it immediately. We have to give the team the ability to understand how to operationalize these insights to be able to have that conversation with the customer, address it early, and identify the gaps that can be met.
Great. So Aseem, maybe you can close it out here with some thoughts on how to get started or something.
I think our value proposition is incredibly simple. We can help you be predictive and actionable in improving the metrics, NRR metrics for your organization. And the way we do that is, our process is pretty straightforward. We'll work with you, Ash. So if you're interested, give us a call. We'll, my contact's up there, aseem@immersa.co. But we connect to your product and CRM data. That's usually a 30-minute call. Then there's a discovery call to better understand your use case and what you're trying to solve for. We then come back to you with the validated information, predictive NRR report, and then help you figure out how to reduce churn or drive growth for each. At an account level, we can start to send those signals into your CRM instance. And for folks who are invited to this session, so this was a invite-only session. We will do this for you without any cost to you until we can prove some value. Typically, that's about 30 days, but we're willing to sort of extend that to a time frame that's more comfortable to you. So we're happy to work with you on something like that. Last thing I will mention, those of you who are interested in this retention and growth topic, we have a conversation coming up next week. Very, very interesting and exciting conversation with Madeline Dupre, who runs customer success for North America with AirCall.
Nice.
So please join us. You can register from our website, and it'll be pretty exciting. And you can ask a lot of your questions there as well.
Great. Well, I want to thank Levi, your time. I know you're in London today, flying home, so safe flights to you. Aseem, thank you for sharing your insights, and all the attendees today. Thank you for being here. As I mentioned at the outset, we've recorded the call. We're going to capture takeaways and we're going to share it back with everybody. Want to make sure everybody can connect with us as well. So if there's any follow-up that anybody would like to do, happy to engage further, share best practices. We do think this is an evolving topic and there'll be a lot more to be learned on the topic. So thank you, everybody. Have a great rest of your day.
Thanks, Camille, and thank you, Levi, for joining us.
Thank you for having me.
Okay.
Pleasure.